Okay.
All right. Good afternoon, everyone from Singapore and around the world. Welcome back to DealStreetAsia's Asia PEVC Summit 2021. Today, I am very pleased to welcome a well-known venture capitalist in Singapore. He is none other than Mr. Chua CEO of Vertex Holdings. Vertex Holdings is a venture capital investment holding company with 6 billion in assets under management. The firm has 6 funds in its network: Vertex China, Vertex Israel, Vertex US, Vertex Healthcare, Vertex Growth, and Vertex Southeast Asia and India. Before we begin, I just want to send a gentle reminder to our audience. If you guys have any questions, please do submit your questions into the Q&A box. And I will do my utmost best to include your questions in today's discussion. Thank you for joining us, Keelok.
Thank you for having me. Yeah.
So I just wanted to kind of take us all a step back as well into kind of the history of Vertex. Your journey with Vertex actually began quite some time ago in 2008. I was reading a recent interview that you gave that you were actually roped in by Temasek to join Vertex at that point of time to so-called rebuild its venture activity and come in and help put it together. Could you kind of paint a picture for us in terms of what the status of Vertex was at that point of time, what your top priorities were as CEO, and how VC investing has evolved since then till now?
So maybe just take a step backwards a bit further than when I started. Vertex actually has been around for a long time. 1988 is where it started, originally as a corporate venture capital arm of Singapore Technologies, and did well, expanded globally, and unfortunately, was encountered the dot-com bubble in 2001, which happened to everybody, and it was reorganized under Temasek and hibernated from 2001 to 2008. And sometime in 2008, I was sort of persuaded to come in to help to restart these venture capital activities under Vertex. Originally, the idea was that Temasek would give full capital as a single LP to Vertex, and then we can invest globally, starting from Asia and then grow over time. And in 2014, the top management, in fact, today's CEO of Temasek, Dylan, and also our chairman, Domingue, and they sort of, trying to push us to say, look, let's think even bigger. How can we scale even faster, and how do we go globally and expand much quicker? So they're in that new transformation in 2014, whereby where our current structure of 6 network funds, each of them individually, separately owned by the general partners, and then each of them go out to raise money every 3 years. And because of this, we're able to scale from initially $200 million US to today about $6 billion asset, and half of it are raised externally. And I think the difference between then and now is we are now much more in global footprint, and then we also have a lot of international investors, and we also are able to invest in a lot of area globally.
Oh, okay. So you're saying that when you look at the growth trajectory for Vertex, it was 2008 to 2014, and 2014 was the time where you guys really kind of internationalized your business. I mean, where are you now? I mean, what's the way forward for Vertex from now? Is it to continue?
The major difference between then and now is probably more in terms of 2008 to 2013. We are largely 100% capital from Temasek alone through the Vertex Holdings structure. Now, 2014 onwards, about 60-70% of capital, each of the network funds are raised from global investor, be it endowment, be it sovereign wealth, whoever they can, are able to see the raise money from. They were able to raise that. So, for example, Southeast Asia India fund, the most recent fund is 305 million. Roughly around 70% are raised from global investor, 30% are from Vertex Holding, or rather Temasek's own Vertex Holding, and the rest of capital are of course from general partners themselves. So that difference between that part and the 2014 part is that we are now have each of the partnership have raised external capital from global investors.
Okay. So moving forward, I mean, obviously your AUM has expanded significantly since that point of time. I mean, is the way forward to kind of further diversify, raise more external LPs and ramp up your AUM from, from now to moving forward? What is kind of the way forward for you guys?
I think we'll continue this path because today we have, of the 6 funds, 5 early stage, 1 is growth fund. And then they'll continue this path of growing in that AUM. So in terms of, each of the partnership, what they need to do is continue to perform, generating good return, DPI, so that they're able to come out to raise money every 3 years, right? I mean, this one part about raising money is every 3 years, your investment period finish, and then you need to raise the next fund. So that's something that we all of us have to do this. And then with the venture capital today, there are a lot more returns, a lot more successes. There are a lot more opportunities. So funds had to also similarly scale bigger. So many of us had to, from previous fund to the new funds, you had to proportionally increase to capture better opportunity going forward. So for each of the network funds, they will scale accordingly based on the market needs and then the demand, and then grow accordingly.
I mean, how have conversations changed? I mean, through the years, especially when you talk about LPs, I think we are entering a season where we are seeing a lot of LPs increasingly deploy more and more into venture capital. How have the conversations changed in the last 3 years? And are we entering a season where, more of these LPs are warming up to VC funds like yourself, especially more to those as well here in Southeast Asia, where it's frequently seen as the next emerging Asian destination for capital here in Asia?
I think you have a couple of questions in your questions actually. As a venture capital as a whole, generally, if you look at the past 5 to 6 years performance, venture capital as a group has performed in terms better than many other asset class, generally speaking. So therefore, a lot more money will come into this sector as a general category. But then in terms of where the money deployed, it varies, right? In the past 10 years, mostly money have been pouring to US and China largely. To a certain extent, a bit more to Israel. Southeast Asia in the past has been less attractive to many international investors, largely because I think in the past, relative to everything else, Southeast Asia looks small. I mean, if you look at 5-6 years ago, Southeast Asia venture capital was what, $2-3 billion US annually. I think this year up to September, you are looking at 10 billion. 400 over companies have raised money. So much bigger, right, compared with what it used to be 5-6 years ago. And then you also see a lot more exit in Southeast Asia, Bukalapak, Grab, and many other examples that people are taking company IPO. So there are a lot of international investor LP. They are seeing the opportunity to create returns in Southeast Asia. So I mean, just to answer your question about Southeast Asia, in the last, I guess, 12 to 18 months, we are seeing a lot more people asking questions, asking for conversation to update where you are, and then talk about your performance and things like this. We are hearing a lot more this kind of invitation, for lack of the better words, and I think you will continue to see this, and especially since that with the China-US trade war continuing looming at everybody's in the horizon, everybody will be mindful to find other places to deploy capital. So I think Southeast Asia, I think the next few years should be pretty good for the venture capital.
One thing that we're also seeing as well is that a lot of the VC funds, I mean, yourself included, have really grown in size. I think in the past, you saw the likes of, I guess, SoftBank Vision Fund was the only one that was the one writing these crazy checks at crazy pace. And now in the last, 9 to 12 months, you've really seen a ramp up of some of these new guys, whether it's Tiger Global, whether it's Insight Partners, A16 from the US, all of them doing the same, writing significantly larger checks. They're doing it faster and they don't even want a board seat. Where are we heading? What direction are we heading towards as a VC market, and what does this mean for an investor like Vertex?
Well, for Vertex Southeast Asia, India team is largely still early stage. So early stage check size, fortunately, is still relatively small compared with, let's say, China or US today. So in that sense, probably still okay. But of course, as a company scale over time, B round become bigger, C round become even bigger, D round become even larger over time, right? So I think that is probably unfortunate. This is just the market demands and the scale, right? So early stage today we still relatively modest compared to say China, US. Early stage deal is still around 5 to 7 million US in deal size generally. Of course, there are some exception. First round is 200 million. Those things are, I guess, outlier. But generally, it's around 10 million or less than that in early stage deal or A round. But this of course, as you go on scale the company, next round will be 30, 40 million and so on and so forth. That will be larger as the market is bigger. And of course, Southeast Asia is a big market, right? 600 million people population, growing middle class, internet, broadband is readily available. And then a lot of young population, they are relatively tech savvy. So there's a lot more opportunity to capture their attention and create better revenue, right? So that's why a lot of times you see company early stage where they may raise a modest amount of money. When they are able to prove their concept, B round become much bigger and faster because they want to capture that lion's share faster. So I think that will continue to be the case for the next couple of years.
When we talk about valuations, I mean, has there been any surprise on the upside, especially since the pandemic last year? I mean, I'm speaking across the board, I guess, not just to Southeast Asia. I think the question is always, in Southeast Asia has always been about whether, some of these valuations are sustainable. And then, you can kind of drill that down into, the stages, early stage, Series B to C and growth stage and stuff like that. But from a big picture lens, from what you're seeing, Southeast Asia, China, India, US, how are valuations trending these days and where are we kind of heading?
Well, I guess the unfortunate things are when you have a lot more money coming to one market, whether it's Southeast Asia or China, US, you generally will create a bit of inflation. And in any business, this is one of the problems. So I think we are no exception. We are seeing certain concept valuations are getting higher than what it used to be. But I guess relative to the to exit, if you are able to even exit at higher valuation eventually, I think that's no problem. You can pay a slightly higher price. Instead of exiting at 5 billion, now you're talking about 10 billion, that is fine. So the question is always, is this concept can be a multi-billion dollar concept, or this is just a $50 million idea? So I think this is something that we still have to ask ourselves every time. So entry price clearly have gone up. That one is no doubt. But I think will continue to go up as the market continue to attract a lot more money into this market.
In Southeast Asia specifically, I mean, how sustainable, how are valuations looking like, and are they growing at a sustainable pace? Because, it's always the same argument that, talent, tech, the valuations may be rising much faster than the quality of our companies that we're seeing here in the deal flow in this part of the world.
I guess in the venture capital investments, the valuation sometimes to a larger extent is proportionate to the exit market, right? So the public market the past few years has been really hot, and thanks to many countries printing a lot more money, so a lot of this money have been coming into the stock market that drives up the valuation in the public market. Relatively, that also brings up the private markets valuation. So I think that part, is unfortunate. Is a sort of rising tide kind of effect for everywhere. Well, I can appreciate what you are saying that in terms of relative to, let's say, China or US, in terms of entrepreneurs' experience, in terms of capability, maybe perhaps relative to US and China, maybe slightly behind. Whether this valuation is justifiable. But I think ultimately it's still back to the same thing. Whether you pay higher, can you get even higher in terms of exit valuations? So I think when you do all this investment, you have to assess yourself, compare to the team and the exit valuation, the concept, the team can execute well. So these things, all these questions you have to answer yourself.
In terms of, I mean, you did bring up this whole idea of the public markets. I mean, generally, I think people tend to say that, there's a lot of frothiness in the market. The funny thing is that everyone was talking about it last year, and it seems like it just hasn't died down at all, and it seems to poised to continue for some time to come. I don't know, is this the view that that you take as well, and what kind of what does this mean for a VC like yourself, where you do need to take, in terms of the window of opportunity for exits, is the window narrowing?
No, I think we are living in a very interesting time, right? In the past, we all learned one basic principle: any country that printed money, within 18 months, the stock market will go up. After that, the money somehow run out of steam, the market will come down, right? That was, used to be the theory, right? About, quantity easing and or how the money is going to get into the public market, right? But I guess the past 2 years is very unusual for all of us. We've never seen this kind of phenomenon. Firstly, every country is printing money. US, I think, printed 3 trillion, and then that all have gotten into the market, right? So whether this, how long will this 3 trillion or whatever capital, the cash was printed, will sustain the market? That one we really do not know. Clearly, a market is behaving in a certain way that after a while you had to take a breather, right? Whether it's bad news or something, that's people all just got concerned, start pulling out money to switch over to other assets. This is a matter of time, right? Whether it's today, tomorrow, or the day after, I guess we will all have to wait to see. But for us at VC, we are about investing in technology, innovation, everything else. So what we need to do is, whenever we invest, we need to make sure that the team, the technology is real stuff, right? We're not investing some fluffy, concept of whatever the thing. It's something real, right? We may be overpaid slightly. Market could come down, but so long you are investing in the right team, right idea, real product, real technology, things will come back, and then eventually you will be able to capture upside. So the key is still back to investing right company, right technology, right people. I think this is the key.
Can you give us a sense in terms of your own exit expectations for Vertex Holdings as a whole in the next 6 to 12 months? And I was wondering, keeping in line with what we were talking about, public markets, do you see this as a time for Vertex to accelerate the exit momentum for some of your portfolio companies, seeing that there's still quite a lot of excitement, I guess, in the markets?
Well, first of all, the company had to be ready, right? The company had to be, if you're a software company, you had to be at least about $100 million US revenue, whether ARR or annualized or whatever, to be able to, to have a decent IPO, right? So depending on whether it's Israel fund, China fund, we have different portfolio in different level of development, right? Some of them are much more advanced, so they're now in the process of doing that. Some of them are still much far behind. You can't really, a $20 million revenue company not going to get much attention in certain market, right? So therefore you have to prioritize some of this so-called developments. So some of our companies are getting very close to that, and we definitely encourage them to go and raise more money as in the public market. Public market is not necessarily exit for many of us. Actually, it's just a beginning of raising more capital so that you can continue to scale faster. And public market is a way for you to raise more money faster, right? So if your company is ready to do that, we should always encourage them to do this. If they're not ready, of course, don't force them to do it, because the company could collapse, after IPO. So that's something is that we had to always prioritize.
One of the things that we also, witnessed in the last year was also the whole regulatory clampdown that we saw in China. The whole government intervention on some of these Chinese tech giants. At the same time, a number of these Chinese tech giants have also been pulling out their IPO plans for the US. We're beginning to see a bit of a split, between the Chinese and the US ecosystems. And one of the questions I've always had for VC firms that are in China is what's going to happen to some of these Chinese VC funds there? How does that kind of play into exits for your China fund? And do you envision seeing, a massive route of some of these exits, moving into Hong Kong, for example, instead of the US?
I guess this is one of the bigger, trends with this two big elephant called US and China, right? Started off in trade war, then become technology war, now become capital market war, right? I guess this kind of bifurcation will continue for a while. So I guess more Chinese company probably will find it much more convenient to go IPO in Hong Kong, which is quite an efficient market by itself. And certain company may find it better to be listed in Starboard in Shanghai or even Shenzhen board in terms of the technology listing. So I think China, one of the advantage for a lot of Chinese companies that they have a lot more options. They have the Starboard, Shenzhen board, or even the Hong Kong board. So that one, I think, is not going to be an issue for a Chinese company. I think that they'll be fine. Just that less of them will go US because of the certain concern, right? And of course, US company will continue to have their own development. And Southeast Asia company today, the US is still the only option for us for now. Hopefully one day it will change.
Moving on, I mean, okay, keeping along since we're talking about exits in general, I was wondering if you could kind of take us through your own thoughts around exit strategy for yourself. What exactly are you aiming for Vertex? And another question also alongside that is Grab. I think Vertex is very well known for being the first institutional investor in Grab. And yet at the same time, you guys actually took a partial exit. I guess maybe it's arguable, but some people will say, like, why did you guys take a partial exit so early on when we're only now beginning to see them, actually hit all the way to IPO? Maybe if you could kind of take us through some of your thoughts around that.
No, I think there are a couple of things in play here. But firstly, the company developments, they have to be ready to go IPO. So not everybody are able to execute so well like what the Grab team had done, scale out so fast and so well, and then expanded so well and compete against Uber and practically killed it, absorb them under their wings. Very few people are able to do this well. So I think that credit to the team and how Anthony and the team are able to scale themselves. So I think that is a good thing. So for us as a venture capitalist, priority is always to grow the company, build the strength over time, take the company IPO, and that will be the ideal case. And then in the absence of that, somebody come around and offer us a better price in terms of the M&A to buy out the whole company at a better price. Well, why not, right? And now, of course, as a VC, last but not least, it's always about return capital to the investor, right? I always point out to my younger colleagues, it's very nice to have the so-called artificial markup. We can't go to restaurant and give them the artificial markup to buy food, right? So it's still down to real cash, right? Yeah. So if you for your investors, it's all about distribution, about returns, right? And if you at that point in time, if you feel that you have a good price and that based on what you're trying to achieve and measuring to the timing, everything else, and you feel that it's a good price, you should create a return and give the money back to your investors, because your investors have the money, they probably can generate better return than you can. If you are not able to triple or 10 times the money, maybe it's better for you to take the money and give it back to the investor, let them go and create that better return. So for us, it's whether it's Grab or anybody else, it's all this consideration. Is this the right price? Is this the right time? And then, can we do even better if we wait? If we cannot do even better, we wait. And it's really better to give the money to the investor to let them use the money for other purposes. So these are the considerations. So, every deal that we do, we go through the same process and look at it and compare the exit versus the value and what the investor could have done with the money.
Sticking with exits still, when we talk about Southeast Asia, I think, even just like a year or two back, it's interesting because like 1-2 years ago, nobody was talking about exits here in Southeast Asia. And then, 1 to 2 years on, now that's like practically everything that we talk about, whether it's IPO, whether it's SPAC. When you compare some of the ecosystems like Southeast Asia versus what you're seeing in China and Israel and the US, how far are we for Southeast Asia's ecosystem in terms of the kind of volume of, say, M&A activity or maybe potential IPO activity that, that we are, the maturity, I'm trying to say, in terms of how far away are we from some of these more mature ecosystems? Then can we expect more, M&A interest, perhaps even for some of our companies here?
No, I think what we are going through is not very different from many market, right? I mean, I still remember not very long ago, 15 years ago, when Sina.com went IPO, everybody pointed out to me, this is the only one example. And then NetEase come, there's only two examples. So people are counting by finger, right? How many examples? And then fast forward, China accelerated. A lot of companies went IPO, right? So today, Southeast Asia, we're going through the same thing, right? First, we hear about Razer, then we hear about Garena C, then we hear about Grab, then we hear about Bukalapak. We are counting numbers, right? At some point in time, we'll be hearing it every day, right? And we also have to, relative to where the company was, a lot of these companies was invested about 6-7 years ago. It takes 6-7 years to build a company, right? So that's why you are now seeing a lot more of these companies are exploring exit, right? And then many on board this company was started maybe 4-5 years ago. Another 3-4 more years from now, they will be becoming a lot more matured, right? So you'll see a lot more this opportunity. Unlike our company, Neum, took them 2013 or so. Now 7 years later, just recently raised a huge round, over $1 billion US valuation, executing well, growing very fast, right? Took them 7 years, right, to get to where they are. And then many more examples of this company. It takes a long time to build a company, but once you are there, you will just accelerate. So I think Southeast Asia, you will see more of this example in the next maybe 4, 5, 6 years. That's why I think you are seeing a lot more international investors paying attention to this market.
Okay, I'm just taking a look at our questions, and we have quite a lot of questions. So I think I should spend some time taking some of the Q&A. First question from anonymous user is, can you talk about your plans for SPACs in Singapore? Which companies from your portfolio will you be listing here?
Well, first of all, we are not in the position to talk about this point, because this is something that we probably not the right place to discuss this point. But generally, I think you're referring to the SGX recent SPAC rule, which I think I say this publicly before. Credit to SGX and MES. They have come out with a very well-balanced rules, much more balanced than many one have expected. And I think this should create a lot of interest of people to trying to create a blank check company in Singapore, SGX, and using this blank check to acquire some of this company in Southeast Asia. And why are we so excited about this? Largely, we think that today, if you are a technology company, you want to go IPO, US is the only option. And then today, if you want to go US IPO, you have to be $5 to $10 billion before any serious investor will take you. Will consider you for the listing, right? So if you are not 5 billion or above, it's very hard for you to go IPO in the US market. Now, of course, there's a Hong Kong market. The Hong Kong market is largely China story. For most of us, Southeast Asia, there's no such thing called China story for the moment. So therefore, you are sort of stuck, right? So today, the only option for Southeast Asia companies to get to 5 billion and kind of go IPO in the US, right? What if you're at around 2.5 billion or 3 billion? You want to raise more money? Is there such option? So this SGX blank check company approach gives the additional avenue for some of this company, which can for the interim can raise more capital at a decent valuation, and then continue its growth trajectory as well. So I think it's a good plan. I think for us in Southeast Asia, many of VC, I think we should support it and then try to see how we can leverage on this and grow the business.
I mean, you were speaking specifically to SPACs in Singapore, but I was wondering actually whether Vertex had ever considered doing a SPAC in the US, especially at the height of the whole SPAC frenzy around late last year, beginning of this year. Was that ever a consideration, or what do you think about SPACs in general, maybe in terms of the US market, not so much about Singapore per se?
Yeah, I think SPAC idea is not new. We actually studied a few years ago, and we decided not to do anything in US, largely because at that point in time, we felt that there's just too many noise. I mean, past 12 months, I read some statistic that there are 300 over SPAC created, raised almost $150 billion US. So just imagine SPAC is only 24 months and 24 months. Within 24 months, you must find a company to acquire. If not, you have to return money back to the investors. So just think about that, do we? 300 of this company, many of them were created 1.5 years or 1 year ago. Many of them are expiring soon. So can you imagine how many $5 billion company can you acquire? I mean, I really wonder. So I think, therefore, I think the US is one of those cases whereby there's a lot of this over excitement, and then created a lot of unfortunately, a lot of this SPAC, and then a lot of them now are running out of time. 12 months time, they have to find a good target to acquire. If not, they also will have to return the capital. And the worst thing was that the past 6 to 7 months, you can see a lot of recent SPAC. The so-called redemption rate is went as high as 95%.
Yes.
Average I read was something like 65% was the average. So that's incredible.
Above 50, yeah.
Yeah, it was 65% was the average. So it's incredible. That means you raise $100 million at a SPAC IPO. So, the 65 million of that will disappear over time.
Yeah.
And then and 35 million is remaining, and then you got to pay cost of about 7 million. So actual number left is 28 million. So that's not much, a lot of money for a company like technology company. $28 million is for our terminology in Southeast Asia is like B to C round kind of money, right?
Yeah.
Your IPO, you should be raising something like 150 million, 200 million, right? So so it's kind of interesting trend that's happening in the US back.
Yeah. Okay, next question from another anonymous user. Due to the situation in China, where exits are a question mark now, are you seeing increased interest from US LPs in Southeast Asian GPs?
Well, first of all, I don't think there's a exit question mark in China companies. I think they still can go IPO in Hong Kong or even China. I don't think there's a problem on that basis. Just that they won't go to US for listing anymore, especially if they are dealing with some of the sensitive area. So that one, I think we should put the issue to bed. I think that the other question, Southeast Asia, certainly we are getting a lot more interest. A lot more international investors have been reaching out to us to get an update about where we see the trend, where are the opportunity, where are the exit, where are the things that they could do. And like I say, now as of September this year, $10 billion have been raised for startup company here. I think 377 companies or whatever the number may be. So that is not small, right? So that compared last year to 2020, I think 2020 was 8 billion. So this year probably end the year with about 12 billion or so. So that's 50% higher. Next year maybe another 50% higher. So if you continue this path, very quickly you'll get to 30-40 billion in terms of activities, in terms of investing, and that is sizable. So I think that people are paying attention to this market, and especially since you realize that a market like Singapore, Indonesia, Thailand, Vietnam, Malaysia, they're all relatively vibrant in venture capital investing. So a lot more monies are pouring into the sector.
Next question also on China is Vertex getting more cautious with pre-IPO deals in China, considering that their path to US IPOs is facing Beijing and Washington's heightened regulations?
Well, first of all, our China funds are early stage funds, so they don't really do pre-IPO. So therefore, they're probably not applicable to them. So they are still early stage investor. But having said that, I think also in the later stage deal, pre-IPO deal, they are still good company. Now, I think you can see what China recent action is trying to, I guess, in line with what the presidency's what common prosperity's idea, right? Certain sectors they want to somehow distribute the wealth better. So there are certain of this sector you had to avoid. I mean, just like in the past, we invest a lot actively in China. We don't invest in sector like military or weapons related because those are too sensitive. So now you have to just include that in the data in that category also, education in that category. But does it mean that there's nothing to invest? There's still a lot of things to invest. There's consumer consumption sector is still very big. Semiconductor sector is still very big. Software sector is still very big. So there's a lot more sector that you can continue to invest. Biotech sector is also very, very large and growing very well. So there's still a lot more things you can do and invest in China. I don't think that necessarily is that bad in terms of investing in China.
Okay. Jumping to another question is, how is Vertex different from the other Temasek-backed PE arms? Are all of you looking at the same type of tech deals?
Well, we are a venture capital firm. So Temasek's group, there are other private equity team. So they are certainly, addressing different sector. So that's something we do. We are more in the early, of the 6 funds, 5 of them are in the early stage fund, early idea, early concept. And the growth fund is more in early growth, still around CD round, so not so much later round. So in a sense, we are much more focused in the technology and early stage sector. Then of course there are the other group in Temasek that address the other sectors.
Yeah, keeping in line with this, I mean, like how, and I didn't manage to get to this question, is like how challenging is it for Vertex these days to really be able to prove your value add at a time where you're seeing so many funds, enter the space, there's, no shortage of capital at all. They're also dispensing these checks at super fast pace. I mean, how difficult is it to really be able to differentiate yourself as a VC?
I guess a couple of things we always do, right? So one of the things we always help, besides capital, is always help the entrepreneurs to, in their business development activities. Within Vertex, there's a team of people who do this business development activities, introducing them to Japanese company, to Korean company, to global company, to Singapore companies, whatever that is. That's something that we do quite a bit as a group. And another thing that we do quite a bit beyond this capital is helping them to recruit talents, looking for better people to supplement or complement their team. That's something we do quite a bit more than usual. And of course, depending on the stage of the deal, sometimes entrepreneurs will need a lot more mentorship. So some of the like one of the colleagues, I was telling them that one of the very interesting part about our business that every entrepreneur, most of the entrepreneurs are new to this business, right? They may have some new idea, new concept, but they never be a manager before. They never been a CEO before. So this is the first time they are doing many of these things. So a lot of this kind of conversation needs to happen with the entrepreneur. So we have done this before. So sometimes we are able to sit down with entrepreneurs and say, look, this is probably the way to do this. This is how you scale. This is what you should be focusing on. And of course, ultimately, this is more like a mentor to the entrepreneurs. And that's something we have done reasonably well to most of our company. So it's, like you say, it's beyond capital. I mean, money is everybody can give. And very fortunately, because we for Vertex, at least for Israel, for US, for China, or even for Southeast Asia, we have been doing this for a long time. So therefore, every time people ask prove your value. For Southeast Asia, it's very simple. We ask them to call 3 or 4 entrepreneurs who we have backed before, right? I mean, Santin Life, Joseph, he will tell you all the story about how we helped him. Many other companies, we can refer to them and they will tell you, how we have been able to, stay course with them. When things are not going well, we sit down and go through it and then see how to solve the problem versus trying to abandon them and just run away. Which is quite common for a lot of VC, but we always sit down and think through the issue with them and say, this is the problem, but let's try to address this problem first, so on and so forth. So I think you're right, the capital, everybody have, but the issue is all these other things can you, bring to help us support the entrepreneurs. Yeah.
Okay. I think we have time for one last question. It's regarding your bond issue. The question was, what was the logic behind issuing bonds to raise money? Will you do more deals in the future? Meaning, like, do you see this as a strategy that you perhaps want to take more of moving forward, especially when you talk about, looking to diversify your LP pool?
So there are two groups in Vertex. So one is Vertex Holding, which is a holding level. One is the Vertex underlying funds, so 6 of them, right? So the one that issued the bond is a Vertex Holding, which is the one owned by Temasek. So the one that issued the bond is this. So essentially, Vertex Holding historically is supports come in two forms. One is Temasek, one is through capital that we receive from our distribution from our underlying fund, right? That's happening now, also called capital. So the bond is just another method for us to raise more capital at a 3%, 3.5% interest rate, and then in return use this capital to fund our underlying funds, which are most of them are generating 25% or 25% IRR. So in a sense, that's a very good so-called pickup for us in terms of return. 3% borrowing, 25% return. So that's a Vertex Holdings structure. The underlying fund is still the standard LP GP structure, going to raise money from endowment, for asset manager, and so on and so forth. That will not change. The underlying fund will not raise bond. It's a Vertex Holding that raise bond. Yeah.
Okay. I think we have come to the end of the session. We've run out of time. Thank you so much for your time, Kila. Thank you everyone for joining us here today. I hope to see all of you again soon, and do stick around. Yeah, we'll see you again soon. Bye.
Thank you. Thank you.